Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Isreal, Joel Elconin, Dennis Dick, Mitch Hoch with you this morning. Got a lot to discuss today. Today is actually the 1-year anniversary of Pumpin' Powell, of the Fed coming in with two hands, with their printers go burr. Market bottomed 1 year ago today. The day the Fed announced they were going to throw as much money at this thing as is possible. And so maybe we can reflect on that for a minute, because that could be fun. The very first edition of Pumpin' Powell.
It's Pumpin' Powell.
We have Dennis wants to explain what a weird thing that happened last night in GameStop. There was a call it a fat finger. A few people reached out to him about an odd tick. We'll get to that and why that happened and what that means. Got a lot of news this morning, though. Astrazeneca has some news. Microsoft has some news. Viacom has some news. FREQ is your disaster stock of the day. There's a bidding war for Coherent, COHR. So a lot to get to on today's show. Our guests, we have two guests, one at 8:35, one at 9. Nick Chahine will be on at 8:35. He is the author of Create Income with Option Spreads. And David Traynor will be on at 9. He is the founder and CEO of New Constructs, and he'll break down the market and some earnings reports for us at that time. Don't forget, everyone, smash that like button. Let's go. It's Tuesday morning. We got a full day ahead. We're excited. Not that. Smash the like button, and I will throw it to Joel, and Joel will tell us what's doing here in the overnight session. Good morning, Joel.
And you didn't mention the most important news.
And congratulations to Joel.
We're dancing, baby. Sweet 16.
Survive in advance is the name of the game. Michigan did it. Maryland did not.
Oh, man. Hard to concentrate all day yesterday, that game. I do not like these the format. I know it's COVID and everything, but man, I like everything over by the weekend except for the final game. But that's not why you guys are here and gals. S&P's down 15 handles at 39.15. Little weak on the close, kind of follow through. Pre-market high 39.38.75. That looks safe for now. Pre-market low, 39.08 1/4. Have nothing there. Our intraday low, our 9:30 to 4:15 low, was 03.5. And I know that because I got stopped out there on a long. Crude, that's down 268. Crude getting lit up at 56.98 or 89, that is. Gold trying to get over 17.50, only up $1 at 17.39.10. Silver going the opposite way. We have silver down 12.4 cents at 25.65. In Bitcoin, some cautious words by Pumpin' Powell on it. It's down $1,065 at 54,540. And I talked to a long-term bull yesterday, and he is flat Bitcoin. And it was out without me talking about the 55,000 level. But Bitcoin, let's see. Down $1,000. Triple D. Did you sell GameStop at 374 last night?
I wish I did. I'd love to, but no, nobody. And the truth is, show the print that we're talking about. Let me see if we got
it. Yeah.
Multiple people reaching out to me. Did GameStop trade to 372 last night? It absolutely did not. You will see it on the tape. We'll show you the tape right now. What this is called is a bad tick. And we this is one argument they've been even talking about in GameStop in the congressional hearings, not talking about bad ticks, but talking about FINRA. People talk about off exchange trading. There's not enough transparency there. What we need is more transparency, because about half of your trades, almost half your trades, occur off exchange. They're not occurring on the exchange. So all those trades just get reported as FINRA trade reporting facility, just blanket them all. So that can include off-exchange market makers, like where retail orders are being executed. That can include institutional crosses. It includes any type of, and talk, we know people are putting trades together. It can include anything, that's off-exchange, and they just blanket it all there. A lot of that stuff is reported to the tape. There are internalizers like Citadel, UBS, and, all reported automatically. It goes automatically to the tape. So you're not going to see a lot of mistakes there. But there is sometimes some off-exchange trading that's still manually reported to the tape. What I suspect, and because we don't have transparency, we can only suspect. We don't really know why the 372 is there. What I suspect is that somebody was reporting that manually to the FINRA tape and keystroked it wrong. They typed in the wrong number. So when the trade occurred, off-exchange got to be reported to the FINRA tape. They've literally typed in the wrong number, sent it in, it gets printed to the tape, and obviously didn't trade there. I mean, GameStop, if you look at the chart, hasn't traded 372 in, back since January. So a lot of times you'll see trades that occur outside the market because they're getting reported late to the tape, where that trade occurred earlier during the day. But, there's been no trade happening in GameStop like there for months. So there's no way for you to sell it up there. There's no way for you to buy it up there. When it's FINRA, it's stuff that's happening off exchange. It's not, some of your trades occur. If you're a retail trader, some of your trades will hit the FINRA tape because that's the off exchange market maker that's executing your order and then reporting it to the FINRA tape. But that 372, if you think you can get that price, you cannot. It really didn't trade there. It was probably keystroked in wrong. The trade probably didn't occur at that price. So that's your quick explanation. So if your after hours churn GME looks funky, it's just because 100 shares was misreported at 6:03 on GME.
And isn't there a time in the morning when they throw up a bunch of late prints?
8 o'clock.
8 o'clock, yeah.
In the morning, you'll see where your charts do a lot of funky stuff. A lot of the FINRA reports come in at 8 a.m. as well. So, I mean, stuff's getting reported to FINRA all the time. This trade's always occurring. But then there's, like a bunch that hit the tape at 8 a.m., which throws out your charts there too. Usually you're not seeing something 200 points outside the market. That's why I suspect it was, a human error in, typing this, out. And I would imagine there may even be a correction in the tape later on today if they catch it. But I mean, it's just been reported wrong. It's highly unlikely that the trade actually occurred at that price. In any regard, there's nobody buying or selling. You cannot buy or sell it at 372. Be nice. I'd love to sell at GameStop at 372 and rebuy it at 195, or buy it at 195 and sell at 372. But no such luck. There's no free lunch.
My chart, TradeStation didn't even pick that up, or it's not on there. But
maybe they already wiped it out.
Same with me, Joel. I didn't even see it.
They could have wiped it out. I mean, maybe it's already been corrected. Mine is showing it still. So somebody asked me, so I just went and downloaded the tape. And I was like, okay, yeah, there it is. So I just circled it and sent it out there. And I thought, that's a good educational point too, because you do see these trades sometimes occur outside the market. So that's your quick explanation.
Yeah. All right, education.
GME is supposed to report earnings here, though.
Are you ready?
So we might as well talk GameStop because there's going to be fireworks on this. What is first? I didn't go look at the expected move. Did anybody do that?
I can do that in a second. What I was going to say is that as far as timing, GameStop is you almost always out at like 4:15 Eastern. Like I went back and looked at the last 2 years, last 8 quarters, and they're almost always out at 4:15. The call is, I think, really what people want to see or hear, and that'll be at 5 Eastern.
Going out to March 26th, right? Yeah, March 26th. I'm just pricing it for you right now. 190.
Let me guess.
Yes.
100.
No, lower. It's not $100.
No. 80.
$100. I'll rate it for $100.
$100. The stock
it's a $195 stock.
The straddle, though? You said the straddle, right?
Yeah, I'll rate the straddle for $100 and I'll hedge myself out.
It's 50 up, 50 down.
No way. No, because it's 100 is way too much on a $194 stock. So you're way high there. Spencer, your guess.
Well, I kind of cheated, but is it 60?
Yeah, it's $58.
I cheated.
Again, we're looking at the closing prices. Options aren't open in the morning, so we're just taking the close. I just went and grabbed the 195s. You want to quick calculate that? Easy. Go to the most current option expiration, which is March 26th, I've got, and go to the closest strike, 195, closest strike, and take the out of the puts and out of the calls at that strike. So the last on the calls were 28.90. The last on the puts were $30. So and then there's the spread involved there. So you can just ballpark at $58 to $59. It's a lot of money to pay for straddle on an earnings. So they're expecting a $58 move is what they're expecting. I'm going to say it's going to go less than that. So I don't have the guts, but I'd like to be a straddle raider on this. But I don't have the guts.
That's a hot take.
Yeah, I don't have the guts though for it. Wouldn't sleep well at night imagining, they come out with some news on NFT or something. GameStop's going to get into the NFT market, and the thing's like $500.
Really, it really wouldn't go to the moon at that.
That's just a joke. No, not suspecting. I'm just like,
be careful
be careful with what you say. Yeah, people say, Dennis Dick said that GameStop's going to get into NFTs. It was a joke. So just clarifying.
Jack Dorsey sold his tweet for $2.9 million.
It's just so crazy, man.
Wow.
So somebody officially owns the first tweet. I guess that's kind of cool. They can print it out, put it on the wall, and say, I own the first tweet. It cost me $2.9 million. I could print it out for free and say, hey, there's the first tweet. So, but I guess it's the I own it. I kind of, you keep reading about this and maybe you get it. I mean, you could just print out the Mona Lisa and throw it on your wall and say, here, there's the Mona Lisa, but you don't own the official Mona Lisa. So I kind of get the scarcity of it in that regard. Is the tweet worth $2.9 million? Is a series of farts worth $75 or whatever from some random guy? How much was it worth?
I thought you said 85. I thought I read 85.
$85.
What's the difference?
And then is the Beeple thing worth $60 million or whatever they paid? I don't know, man. I mean, we're just in an environment where there's money all over the place. There's a lot of rich people. The rich got richer, the poor got poorer, the gap got wider, and the rich are looking to do stuff with their money, and this is the new cool thing. Let's go and get right in these NFTs. They're going to get big, and I'm going to own the first tweet, and it's going to be worth more because somebody else is going to pay more for it. So, I mean, if somebody's willing to pay more afterwards and you make money on it, I guess it was a good investment. But I'm still, and the stocks, give your list again here, Spencer, because the list you gave us 3-4 days ago on this show has definitely exploded. TKAT at the top of that list. It's now $57. We were talking about this about 20 and something. I'm saying I don't know anything about this stuff. This is highly speculative, but man, that list has continued to explode. TKAT being right at the top.
Yeah, you've got like WKEY, you got HOFV. These are from yesterday, guys. Last night
I'm writing them down again.
Last night, Playboy, PLBY.
What do you mean Playboy?
Yeah, remember they're public again. They SPAC'd it out.
Are they an NFT play all of a sudden?
They said, what did they say? The CEO said at a Roth conference that they're attracted to the NFT space. So yeah, basically that's what that means.
They're going to sell naked pictures of girls. You're going to have the official naked picture of this girl. I guess I can see a fit there.
The whole point is it's good for art and photography. So why theoretically, right? In theory, it should work.
I still think Kodak, man. I know, like, it doesn't get any love. But
there was a thing last night. On Kodak.
Yeah, there was a press release or something, but then it went back down too.
It
popped and then dropped.
A company blog post. Yeah, that I don't really even know the point. I didn't quite put 2 and 2 together there, but
yeah. I don't know. I kind of like the code. I don't have it. I had it, and then I got, obviously I was playing it, and I thought it might get an NFT pop on. Then I had the crappy earnings, and I was able to sneak out of it on the earnings pop off the crappy earnings. I'm not in it right now. I kind of want to be. I don't know, but maybe this is just every time it pops, it just seems to drop. So hasn't got any NFT love as of up to this point. So maybe it's not gonna.
Finding support here, $8. There's decent support if you traded it.
Yeah, I don't know.
5 lows in a row.
I didn't like that. It had some headline last night though, and then popped and then dropped on anyways. So I don't know. I've also got others on this list here. I don't have any of these things. I'm just looking, off Twitter and stuff. So I'm looking at I'm basically looking off my scanner. I'm seeing these ridiculous pops. I'm like, well, what is that? And then you look and you can look on Twitter. It's like, oh, they're talking about it as an NFT.
So like something I would recommend if you've got Benzinga Pro, the easiest thing to do is just do a keyword search for the word token. So like if I
always pop in there.
Here, let me
These are highly speculative. And some of these companies are going to be linked to NFT, and some of them are just being discussed on social media as possible NFT plays and popping because of that. And there's been nothing from the companies on them. So, I mean, you got to be very careful with all this stuff. Some of these stocks have exploded. For
sure. But like, you can just search the word token and then see the ticker. So CLPS, okay? I don't know. Right? LIVX. You got to just kind
catchy,
yeah. Right, you got to just, but like, this is a good first source though. If you want like to get your list and see, okay, what am I missing? Like, you could try searching on Twitter, but this is a much more refined search, right? Just the word token. So you see like TKAT, and you just go back for a few days and grab as many tickers as you can, and start from there, and then whittle it down, or not, you know, or just go to the chart and play the chart. But
I mean, it's WKEY. There's IMTE. They were talking about Zebra KIN. I think you might have just said that one. I think OCG.
Also, the headline is like this: like Pizza Hut is offering the first NFT pizza. You know what I mean? So like,
what does that taste like?
I don't know. Don't ask questions.
What does this taste like? That's funny.
I'm not a big fan of Pizza Hut.
No, I don't think anybody.
I like Pizza Hut. You don't like Pizza Hut?
Stand corrected.
Right. Who doesn't like Pizza Hut? Why don't you like Pizza Hut?
Is this spilling over into like baseball cards and coins and stuff, or just stuff that just digital?
I'm not sure I get.
I think the collectible markets has already been hot though. Okay. Like, you know, so yeah, but it is. I mean, they're talking about digital sports cards and stuff. Like, you know, like I'm sure it's gonna go into everything. Like, you got to think, if this is all run on the Ethereum platform, does that make you want to own Ethereum more than Bitcoin? Because now Bitcoin doesn't seem to have like a real use. I mean, all of a sudden Ethereum has a use. I mean, Bitcoin is a store of value, but what are you really using Bitcoin for besides criminal activities? I mean, nobody's transacting with this. But if this Ethereum is running this whole NFT, and you think these NFTs are going to continue to be hot, and I don't think it's going away anytime soon. I think it's stupid, but I don't think it's going away anytime soon. Maybe you want to be long Ethereum. What's the Ethereum chart look like? It's already exploded, eh?
Yeah, here. We'll bring it up.
Bring it up. Maybe I should trade my Bitcoin in for Ethereum. Should I do that, folks? I don't know any of those.
I mean, you should probably. I mean, I've got some Bitcoin. It's probably a good idea to diversify. I
have two. Yeah, I have two different Bitcoin. I have a Bitcoin ETF, and I have that QBTC one still.
This is Ethereum. This is Ethereum going back to the beginning of last year.
I should have been buying this thing last year on this NFT stuff.
So
we only knew.
Yeah, that's Ethereum. All right, let's go back to the stocks though.
Yeah, I never saw it. Did you put it up there?
They say diversify it. I should sell half my Bitcoin and buy Ethereum with it. I think so too. If this is NFT is going to be all running on Ethereum, maybe I should buy half Ethereum.
Yeah, this is Ethereum. This is the chart of Ethereum. So it's up a lot. What about stock news? Let's talk Microsoft here. Microsoft is reportedly, according to Bloomberg, in talks to potentially acquire Discord, which we know or has been previously reported that it is in play in some way, shape, or form, either to go public via SPAC or otherwise. Discord is, if you don't know, a huge platform for gamers and for traders as well, especially during the pandemic. I think that their downloads grew to about 800,000 a day during the peak of the pandemic. Their user base is over 140 million monthly active users, and that's doubled from where it was 2 years ago.
How is Discord different than any other chat room? Is it just the new sexy chat room? Like, well, how is it? I don't have a Discord account, but maybe I should get one.
So it's not so much how it's different; it's that it's like who is there, right? It's used. It's like a lot of gamers use it, right? Because it allows you to chat via video and text. It's basically it's like the de facto. I mean, you've got Twitch out there as well. Twitch is like a streaming platform.
Yeah.
But Discord is, in theory, right? It's not that different than any chat room that came before it. It's the same idea, but it's just a question of who hangs out there. And a lot of gamers and now a lot of traders hang out there. That's the difference. And this is a great time. I mentioned the fact that who else hangs out on Discord? Benzinga.
You on Discord?
We got a Discord.
Look at Dribble. He's like, we're on Discord?
We're
I
on
didn't know that.
Discord.
Are we on like PreMarket Prep's on Discord right now?
No.
Oh, well, why isn't
I don't think
PreMarket
you
Prep
can
on
do-
there?
Well, PreMarket Prep is no, we're not. No, but Benzinga has a Discord where we post PreMarket Prep, but it's not. We're not live on Discord, at least to my knowledge. I don't think.
I have a question for the chat. Who actually has Discord and actually pays for Discord?
No,
There's
that's
a difference.
That's the question. That's
Yeah,
what-
how's Discord make money?
that.
Dennis, why are you asking?
I guess
so
it's
ridiculously?
advertising, but
Yeah.
This advertising? I
Well,
sound
they
like a
also have
dinosaur. I do. I
services.
definitely sound like a dinosaur. Oh, there's a bunch of people that pay.
And here,
Discord.
Tech Girl says they use schools in France. Use
How much
Discord.
is it? Sorry, I talked over you. How much is the Discord? Like, what do you pay?
Sky Daniels does 22 a month for holy crap, chat's moving fast. 22 a month for a chat on Discord is what Sky Daniels plays.
That's
pays.
pretty good money they got coming in. Man, I
Yeah.
gotta go buy. I gotta go on Discord. 200. Somebody just paying $10, $5. Why do they all pay? There's 3 different tiers apparently. Holy.
No, 200. They
Oh
said
yeah, he just said it was
25.
You know what,
25.
Microsoft? I don't know. Is this a big deal? I mean, a 10 billion is a big deal. Microsoft is just it's been in a trading range here. 225 hasn't been much at 225 to 240. You haven't seen that 240 yet. You haven't even taken out yesterday's high yet. So that's your first number you got to deal with is 3690, and then this 240 high. But let it shake out here between 225 and 240, getting near the top of the trading range.
I just posted the link to the Benzinga Discord
I'm going to check it out right now.
in all the chats.
I can't hit it because it keeps moving on me. There it is.
Yeah,
I'm just trying to. The chat keeps moving.
Yep.
What should everyone call you? Triple D.
All right, don't set this up now.
Go sign up now.
Don't set this up now.
I just did.
All right. Oh, he's that easy. He's done. He was so
I'm in.
All right.
Maybe you
On
can get a
Discord.
bunch of fans on there like you have on Wall Street.
You
Bet.
can temporarily
Reddit.
mute. Enter your birthday. Oh, it's too much. I mean, I cancel.
Out.
It's too much. I'm out.
They want
They
they
ask
want
for
the
more
birthday.
information. No, private information. I'm out of here.
For that reason, I'm out. All right, let's talk Astrazeneca here. This is the first bit of news I saw when I woke up this morning. And it was a release, I guess, from the National Institute of Health. It was the NIAID, which is what Fauci oversees.
Mhm.
And they're concerned that AstraZeneca may have used outdated data
Oh, that's not-
in their U.S. trial for their vaccine, for their COVID
Doesn't
vaccine.
sound that great. The AstraZeneca shot is in Ontario. Actually, my parents are scheduled to get it tomorrow. So I'm like, I have a personal interest in this story a little bit here as well. I mean, it sounds like the numbers, if there's only 29 people that had blood clot issues and millions of people have been vaccinated, it sounds like the risk is fairly low, but I'd rather have the vaccine that had no blood clot issues. So, I don't know what to say about it, but, there's been a couple companies that banned. Lots of companies or lots of countries are still giving it out. Ontario is still giving it out, probably for lack of having any other vaccines in Ontario. I don't know. I'm torn on AstraZeneca. The stock itself's already got, been priced in a lot of this stuff. I mean, is it going to have a huge pop if they get past this? It's dropping a little bit. I mean, if some people, there's more downside than upside with the stock, really. I mean, if some more people start getting sick, you have potential lawsuits here. So, I don't know. I don't think I'd want to own the stock right now.
Trading range kind of got up near the top of the trading range yesterday. 51.21 was the high, giving it back yesterday. I mean, this is already traded over in Europe, so under 50 though. Looks pretty open between 49 and 50. But I mean, these vaccines haven't done a lot for it. Like you'd see, like I said, it popped to the all-time high on that. I don't know. We got a little bit of this. At least a pick. I'm not thrilled about it. I don't think it's going anywhere. So,
yeah.
We go to our disastrous talk of the day, which is
sure.
FREQ. All right. This is Frequency Therapeutics. They're working on a shot to treat sensory neural hearing loss. And their the phase 2A results, interim phase 2A results, basically did not show any improvements in hearing versus the placebo. So FREQ, which was $58 a month 2 months ago, is down to 10 this morning.
So they're working on a hearing drug They call themselves Frequency Therapeutics, and their hearing drug doesn't work.
Yeah.
Not a good recipe for, obviously this is making new all-time lows here now. Everybody always wants to come in these things, and I've been burned this way too. You come in the big day after, and you're like, oh, it'll bounce back. They'll figure this stuff out. Sometimes they do, sometimes they don't. I mean, we're still waiting on Therapeutics. I bought that one on the big dip. It's gone nowhere for basically the last 3 months. So I like, with these one-trick ponies, they're tough because, and when their trick doesn't work out, they're burning cash because they're in trials, and eventually some of these stocks actually don't make it. I don't know if that's going to be the case. Maybe they will figure it out. Maybe the next trial will do better. Maybe they can do some adjusting. But remember, all these startup, biotech companies are burning cash continuously. So when these trials don't work, it's like, okay, well, now we need another round of funding to try again. If you can't get that next round of funding, or, if your next trial doesn't work as well either, you're continuing to burn cash and the stocks continue to leak. So highly speculative, just come in, buy a stock at $9, even though it was 36 yesterday.
This is an interesting chart because they slammed it down to 875, and they bounced a little bit. But it's just not going very far. Like there's no bounce in here yet. I mean, you got a bounce of $1, so protecting that low, but no one is racing out. I keep eyeing that pre-market low 875. That's a new all-time low. But it must be so thick right there, Dennis. What is there, is there a tight market in here, like 990 at $10 or something? This thing is not moving at all after such a big fall. It's no bounce yet. See what happens on the open.
Next.
Let's go to, we haven't talked Coherent for a while on our show, but we should. COHR, because we got ourselves a real bidding war here for COHR. So you got to go back to January to see the first offer. Lumentum. Yeah. Lumentum came out January 19th, said, we're going to buy Coherent for $5.7 billion in cash and stock. So that was on the 19th of January. Fast forward.
What price did that come out to?
So it came out to $100 a share plus one. There's a ratio. So
okay.
I'm not going to get into that. So that was January 19th. Fast forward 3 weeks, we get another unsolicited offer from MKS Instruments, ticker is MKSI there. And Coherent said that would be in exchange for $115 a share in cash plus another ratio. So again, not going to do that math for you. Let's fast forward again so that was on February 8th. Fast forward 4 days to February 12th. IIVI came in with an offer for $260 a share in cash for Coherent. Again, that's February 12th. So now we've got 3 offers on the table as of February 12th. Lumentum came in with a revised offer that values the company at $275 a share in cash. That was on March 17th. And now this morning we have another revised offer from Lumentum that values the company at $230 a share in cash plus a higher ratio. So $230 a share plus a ratio of 0.6724 shares of Lumentum. Is the latest. So that's now the 5th offer we've gotten for this stock between 3 companies.
It looks like eventually somebody's going to buy it. I mean, and who's winning is the shareholders because it keeps getting bid up a little bit more every single time. So I don't know.
Did you say 275?
Yeah, it was 275. That was the offer from Lumentum on March 17th.
Huh. Because it hasn't traded anywhere near there. So
you could have this situation where it keeps going bidding. What if everybody says we're all out? There's always a risk that everybody says they're all out, and then the stock tanks. So I mean, I don't think that's going to happen. But I'm telling you why it's not at 275. So even though there's a bidding war going on,
yeah, it's off at all-time high. Man, the momentum that they definitely tried to get it on the cheap there, right? It went 145 to 200, hung out there. Don't know anything about the company, but they keep jumping the bids like this. I mean, you may eventually want to ring the register. I don't know if I'd want to own the company that picks them up, but hasn't traded in the pre-market. Someone trying to sell 262 here, so quite a bit below that offering price.
All right, it's 8:31. We will definitely get to ticker time. I promise. There's a bunch of tickers that we have here to get to from chat. Let's do a couple more though on our list. Let's start with Viacom.
Offering.
This thing,
Yeah, smart.
stock pissed me
very
off,
smart.
and they come out last night. Hey, we're doing an offering. We're gonna raise $2 billion of Class B shares and $1 billion of Class A convertible preferred shares. And that was out at like 4 o'clock last night.
People want to pay ridiculous prices for their stock. Why not sell, and make some money off of it? So very smart by the company to raise cash when the stock's trading. Is that an all-time high for Viacom?
Oh,
$100?
yeah. Oh, yeah. Oh, yeah.
I can't understand, I guess it's just a value trade. This is your poster child for the value trade. A year ago, stock was $13. We were worried about whether, it was going to even be in business. And now it's the best thing since sliced bread. And it's over $100. I mean, it's went from so cheap on a P multiple to expensive in basically 3 months, because we went from 30 to 100 in the last 3 months. 3 months basically. Unbelievable move. I would have never thought this was possible with Viacom, but the value trade, this is your poster child for how hot the value trade has been.
Sometimes these offerings can really knock stocks off their keister. I don't know if this is going to happen. Hit the $100 tight range yesterday, but obviously we don't have the pricing on it yet. I don't know. Sometimes these are turns. I remember that happened with DraftKings. So I don't know if you're still sitting on profits on this one when the company thinks it's a good idea to do an offering. Maybe it's a good idea for you too.
I'd ring the register if
I would have rung it at like 70, 80, 90.
This value trade, people who are jumping in this value trade now on certain stocks, there's still certain stocks that haven't participated at all. But, people who are jumping in now on this value trade, chasing stocks that went up from 30 to 100 in 3 months. I mean, I guess momentum traders, if you're momentum, these are the kind of stocks you want to be in. But if you're long-term investors, like, I just don't buy stocks after they went up 200% in 3 months. And it's a company that's, obviously business has not been great. So I don't know. I wouldn't short it. I don't short stocks making new all-time highs.
The question, so Joel was asking, or Joel said that sometimes these things can really turn a stock. Can it turn a whole peer group? Because it's not just Viacom. It's also Fox. It's also Discovery. They've all moved together.
Oh, the whole group went. Yeah.
Right.
AMCX, which I talked about as a value trade for a long time. It got hammered, like I was in that thing a couple of years ago thinking, that the stock was cheap, and it was, and it got a hell of a lot cheaper, and it's come too. So, I mean, all of Discovery's been unbelievable. Discovery, 71, it's down here this morning. It might have had something going on, but 30 to 75, unbelievable moves. DISCA we're talking about.
Yep, I got it up there. That's
crazy
down
moves.
65. Maybe I'm thinking like, they're doing an offer. Maybe Viacom's doing an offer, and maybe they're going to do an offering too. Just get some cash way up here. DISCA. That's another value stock, value move. I don't know when to register on these, but good. It's taken out this 75. They had a couple lows in that area the last 2 sessions, so. If you're looking for old support to be new resistance, 2 pair of lows, 74.20, 74.51. On the downside here, we do have a pair of lows to contend with at this called 70.75. That splits some lows between the 15th and the 17th, and then you drop off to a weird number, 66.66. That was your March 12th low.
All right, we will have Nick Chahine from Create Income with Option Spreads on in just a moment.
Sure.
Before that, let's get a head start on ticker time. Let's just do one from the Benzinga Pro chat. They were asking about ticker CAN, which is a high flyer crypto play. They're asking about if Joel can maybe identify for them like a medium term level, like not a short term level, like a
easy.
Well, like a level going out like a few weeks, like a month or two.
Oh yeah, this is an easy one.
It's an easy one. Okay.
All right, and the reason I say it's easy is because you had a big old run emanated from the $5 area. It's under 23, under 23 here. 32.07 is the 50% retracement. This low right here, yeah. I'd say this 20 to 22 area, you better find support here
Yeah.
over the next couple days, or else I think you get more. Also, you got to keep an eye on Bitcoin too. But 2022 must hold area. I just don't like the landscape between 15 and 20, but we'll see. Now, a little bit of a haircut there after the rally from, it was $5 at the beginning of February. Let's see what happens here. See if we can hold this 2022 area, call it 21.
All right, so must hold that area is what you're saying, and if it doesn't, look out. That's basically
Look out, 15.
You want to hold those 50% retracement levels. They're big.
Yep.
Yeah, they're important.
Sure.
Stocks and the whole thought process. Stock has a big run. It corrects itself and gives back usually half the move, stabilize, and then start to go higher again. So you want to see some stabilization. Maybe it's not just to buy the 50% on day one. Try to see if it's going to stabilize there. Like yesterday, it's down another $1 here. So let's see. Let's get some stabilization. Let's get a green candle in there. Let's get show me some support there. Where it should get support.
Yep.
But show it to me. Show me the money.
And also, when you think about this, people are like, oh.
We're
I gotta buy it here. I gotta buy it here. There's people still long at 5, 10, 15. They're like, okay, oh well, I didn't sell it at 40, but I'll sell it at 20. Big volume yesterday on that down day too. So maybe wait along with a couple lows in the same area. Maybe the sellers lighten up a little bit, but that's maybe when you get a little bit of a pop. But that's it. Also, keep an eye on Bitcoin.
All right, Jemiah, somebody just said. I wanted to grab it because I sold this right around this level, and then I had the run to 65. I could actually rebuy the shares that I sold. I originally was in this at 13. Okay. And I got to like 30, 35, and then I think I sold right around there, 35. I can't remember for sure, but it was a great, big winner for me. But then it went to 60. I was like, why did I sell it? It's come all the way back down. I mean, if you think that there's 100 charts that look like this, these high flyers, 2020 that have come off so significantly, like Stitch Fix. Look at Stitch Fix, another one, SFIX. I mean, this thing has just been hammered, but it's starting to stabilize. I mean, if you think that tech is going to turn around, the Qs are going to make new all-time highs, and the Cathy stock's going to get hot again. If you think that, the time to strike on some of these things is now. I don't know if I think that, and that's why I haven't really been loading tech. I don't know what I think. I'd say I'm still guilty until proven innocent. I'm still sitting with a lot of cash in my longer-term account because I'm still nervous a little bit right now. I don't know what's happening with yields. There's a lot of reasons to be nervous, but you know what? Maybe it's time to nibble on some of these that are really beat up. Like the Jemiah evaluation still doesn't make any sense at all. But could it turn back into a Momo trade just for a swing trade? You could look at this and say, okay, well, I'm going to lean on the $40 level. And you're risking 60, 70 cents. And if it turns around on a dime today, you're good. It starts taking it out. I guess you get stopped out. Maybe I'm too tight with that stop, but I don't know. What are your thoughts here on all these stuff?
It's just a different story going on this time, right? It's just like there was no pain here. We're going up. We had a big up day. All right, we go all the way to 70. And now, you got people scratching their head. You got a double top, just at 52. If you want to do it, if you're looking at this, you had a low of 31. Let's call it 31. That was about a 20-point move. So if it can hold in here, this 40-41 area, the only thing is that you're getting into this candle right here, right? Where you had the big up move. So there's not a lot of support, but it's trying to stabilize. Maybe we'll ask. Gene was the one that originally gave me this thing at like $5. We'll see what he thinks after this pullback. But right, it's a couple lows in the same area. I just don't think if you're expecting this kind of move up to 70, it's going to take a while.
All these charts look the same.
I know.
Same thing. Lithium, LTHM. I'm still long lithium. Same thing. I sold part of the lithium though. Palantirs. They're all just not really getting off the mat here. Which is a little concerning because we had that's the one thing concerning. We had a significant bounce in QQQ yesterday, and a lot of these didn't bounce. So what does that mean? You have the big market move like Stitch Fix.
Yeah, but I mean, really, what did bounce? There's just a couple. It was just big tech in the semis, right?
Tesla. Tesla, but then Tesla sold off towards the end of the
It was
day.
big tech in the semis. That's pretty much it.
Value trade. That's a value trade still. So even in the QQQ itself, it found the value trade because you're right. Mega cap, Facebook, ripping higher yesterday, gave back a little bit towards the end of the day. But I mean, that's a value stock. It is. P forward is 19. These aren't like these high flying paying 75 times earnings, or 75 times sales. I mean, so it's a good point, that what was bouncing yesterday was the value tech trade, and that carried the QQQ. But Amazon had a good day, Apple had a good day, the big mega caps. You're right. So do these stocks eventually start to get some love or not? I don't know. I don't know if we know the answer.
It's just hanging out, though. I mean,
they've been hit hard.
I mean, Apple's just. Whew. I mean, usually you get a little bit more of a bounce on this thing. This thing hasn't even sniffed 131 yet. You think it'd be half of the move. I don't know. These are just up, down, up, down, up,
but we're
down.
talking two different stocks, too, here, like two different types of stocks. Like we started talking about the growth tech, and then Spencer was saying, about the mega caps.
Right.
Mega caps, I put in a whole Apple, Amazon, Bang. It's a different group. It's not Jemiah. It's not going to move. They're not moving together. It's not growth tech. That's value tech. So if we're looking at growth tech, like I was looking, the Stitch Fix, the U, all the symbols that are popping out of the chat, Palantir, SKL Zebra, you can see how many people are really heavily into growth tech. Growth tech is completely out of favor and not bouncing.
Yeah.
Does it turn around eventually, or is the trade just too bloody crowded? I mean, I would say people reaching out, to us in the chat and all these other vehicles, we got hundreds of tickers thrown at us, maybe even thousands if we conclude the chat in different ways. I would say 80% of them are growth tech. So does that mean that the growth tech trade is just simply too crowded and has more to come off? I don't know if I know the answer, but I think it could.
Let's ask Nick Chahine from
Yeah, bring him on.
Yeah. Nick, have you noticed or observed the same trend with regards to growth tech is just sort of not running with the rest of the rest?
Right. So sorry on the delay. I had technical gremlins. I upgraded my internet, of course, the first day I really need it. It bit me. So sorry about being late. And as far as tech is concerned, every week I do a video recap, and I usually have like a theme. And this week it's taking my cues from the Qs. And I was focusing on the QQQ. This morning, it looks like the stronger between it and the ES. For example, I have slightly red on the ES, and looks like the NQ, the futures on the so-called tech are green, flattish green. So we might see some leadership there. And as far as it being I think the mentality has changed. I've said it before. That they used to say, okay, growth, rolling out of growth into value, they used to mean that dump the Qs and go to something like the small caps. But that's now flipped upside down. The growth tech has become the value because the small caps is full of froth. So I think it's their turn to step up to the plates and to carry this bull forward. People are not selling. They're just selling one thing to buy something else. That's why the markets keep making new highs. We made new highs last week, except for the NASDAQ. So this week, my focus is on tech.
The rotation definitely keeps us going higher. We started, and you probably couldn't hear the conversation because of your internet, but we started this conversation with stocks like Jemiah, a lot of these stocks that have, higher multiple tech, growth tech is what you could call it, looking at, stocks trading 50, 60 times earnings or, 50, 60 times sales in some cases. These stocks have not bounced. I was looking at JMIA. It hasn't bounced much.
Well, that's part of my conversation. So you say 50, 60 times sales, but that's what's going on in the small caps. If you look at things like, I don't know the time sales on Plug and GME, they
don't make money. Well, GME is different, but yeah.
Right. So the hopium lives there now versus a 12 times sales in a Facebook or 11 or 9. Yeah. So I will take those sales multiples over what's in the value play. So that's the conversation. So I haven't given up on big tech. They will have their day. Like I know that there are values in my head for Apple. I know at 118 it has buyers, 112 it has buyers, 108 it has buyers, 103 and 96. So I know where to buy it. Yeah. So I know. So it's the they used to call that stuff growth tech, and the mentality is still there. But I think once they hit levels, like at what level would you buy Tesla, right? So everybody has a level, and so they have a better floor than all the rest of the stuff right now. So that's why I'm looking at how they behave this week, because they have value below them. Are the buyers going to step up to start building some positions in those?
You know, when I'm just observing a stock like Apple and some of these other things, when they get to an area like they did, I mean, it's just not bouncing. And I think the longer you hang out down here, the longer you don't go back to 130, you just get heavier and heavier. So the fact that, I mean, that was a big sell-off. It came off earnings. So yeah, 120 looks like a good level. It's holding, but man, earnings aren't going to be for a while. I think the longer it stays down here, the more chance, you take it out that low. In the Qs, I like this chart a lot. I mean, you got major resistance just under 325. You took back half of the move. You got major support at 310. So which way is going to go from there? That's what I keep an eye on.
So that's what I'm saying. The easiest trades, there's no easy trades, but the easier wins that I've had are selling credit put spreads, so bull put spreads, selling risk into fear. So on a day when the Qs fell on March 5th and March 8th, those were easy buys for me, because if you look left on the chart, there is a funky candle from September 2nd.
You love those funky candles.
Well, yeah, they speak volumes. That day, the Qs popped out of nowhere and immediately crashed. So, and look, right from that, there were a couple of attempts into November 9th to get out from there. And then finally, by November 27th, they got out. And then they tested it for a footing on December 9th. And then March 5th was the third test with 3 big heavy candles that were immediately rejected. So that places the bet right there. Any dip into that is a buying opportunity with a stop, because if you lose it, you're going to probably fall into the 280 clutches on the QQQ, but that's not my scenario. I will keep buying the dip into that until it fails. So I would get long when it falls into the 300 level, plus or minus a buck, and then stop out as soon as they lose the March 5th low, because they might go to 280, which will be another buying point. So in a biased market like this, where you have the Fed has your back through 2023, they say, and by the way, what the heck kind of schedule? Look at the schedule today. Nothing but Fed. Yeah, my God. And he's going to speak again tomorrow.
It is active, to say the least.
Right. So the Fed has your back. $2 trillion. I'll tell you a little story from this weekend. $2 trillion hitting the market. So my son is 19. He builds trucks for a living, and he just flipped a truck. I kid you not, an 05 Silverado with 340,000 miles, $8,500. So some kid comes over here. Yes, he's counting out cash on my bar, and I'm signing the title off. This kid says, I couldn't get hundreds. The bank ran out because of the stimulus. So this just happened.
Wow.
So I'm just telling you, how can you short stocks?
Yeah,
There's literally money awash. Who's going to pay for all of this? It's a debacle down the line. But for now, this is the most bizarre situation I've ever seen in my life.
Yeah, but that's like tomorrow Nick's problems. Today Nick is having a party.
That's what it is. We're just keeping the party going. The hangover is going to be horrendous.
The hangover is going to suck, but hey, that's tomorrow's problem.
Yeah, it's
Right.
tomorrow. That's the grandkids' problems.
yeah,
There.
the cop-
We just
the
keep
cops-
printing money.
The cops will show up at the door of this party eventually, right? Somebody will call the cops.
I suppose.
Yeah, but for now, you can't fight. So dips are buying opportunities is what I'm trying to say. So if you short, this is what I call downticks mode. Don't fall for the downticks. They're trading opportunities, but it's not the big one, Elizabeth. So
Nick Chahine is the author of Create Income with Option Spreads. Joins us every other Tuesday. You can learn more by going to sellspreads.com or just checking out his other platform, Create Income with Option Spreads. Nick, any final thoughts for us today?
No, just don't be too opinionated. I've let go of my preconceived notions and just trade the action the way it's happening. So don't jump on the bandwagon and ignore the news. Seriously, I keep reading more garbage. It's unbelievable.
Ignore the news. Ignore
Too
the
much
garbage.
news.
Not-
There's
not
just
to
so
the-
much
I-
information coming from us from every different angle. I mean, that's the one thing, social media and everything. Like, it's just like information overload from
Right, but
everywhere.
double check it is what I'm saying,
Yeah,
because I've been reading. I get these emails from Seeking Alpha every morning. I don't know who writes this garbage, because some of the headlines are actually false. So it's like there's nobody checking the actual headlines that are coming out. So make sure to read it and dig into it if it's actionable. So don't just act on it because somebody said it's what it is.
That's always great advice for any kind of market. Thanks a lot, Nick.
All right, thank
Thanks,
you.
Nick.
Sorry about that.
Let's do some ticker time here, and let's start with a question. I think it was from who was in the chat? I think it was from Joel Hatt in the chat. He asked about Assembly Biosciences. They caught a downgrade this morning. This is ASMB is your ticker. Sorry, ASMB. And they caught a downgrade this morning from SVB Leerink to neutral, lower their price target to $8 from $9. Well, no.
I mean,
It's a small company. Like,
yeah. I mean, it just sticks out like a sore thumb here is 431. You had a low 431, 443. You're right there right now. So there's your support. That's the all-time low. Stock was nearly $70 in 2018. So that's all I can give you on that one is the all-time low.
Thoughts on 10-cent music from Robert Kendall? They had earnings last night. I didn't even really look too closely at the numbers. I did for a hot second, but their earnings per share, I guess they were in line, and their sales was missed by the thinnest of margins, basically in line. Everything was in line for TME.
It's just been running and running. I don't know. Like, I'm scared of growth tech, and I guess this would be a growth tech story, but this stock is making new highs. So
I don't know. I guess.
I don't know. Is it? Is it not? It's newer company. I thought it was a growth tech story. Maybe it's got value there too. I'm not sure. I mean, what's in favor is very clearly, just going back to the macro talks when what Nick was talking about. Value tech is in favor. Growth tech completely remains out of favor. Despite the huge run up in the Qs yesterday, you can clearly see it in all the little growth names. Everybody wants to talk about, like, DocuSign. Really didn't do that much yesterday. Yeah, Peloton's bounced a little bit. Yeah, Zoom's bounced a little bit, but I mean, look at where these stocks are. They've really not bounced that much.
No.
So
these charts
overall,
all look alike.
They all look alike. Yeah. All the growth tech, it's like such an algorithmic driven market where it's got growth value, this growth value trade is all algorithmically driven, and now it's separating within tech itself as well between what's a growth tech stock and what's a value tech stock. Intel making new highs. Classic. The valuation's been cheap on Intel forever.
I love Intel.
AMD, has been in the gutter. And Nvidia bounced a little bit yesterday, but it's off significantly from the highs. The reason for that is you're seeing separation within the semis, where Intel's trading with a reasonable valuation, and AMD and Nvidia are trading on these growth valuations, which are very high. So you've completely seen that trade happen within tech itself as well. So I don't know when that trade reverses again, and that's the question. Like, if you want to reallocate, and if you've been value, and I have, to a certain extent, my portfolio is probably doing fairly well because I'm in a lot of value stocks. It's probably the time to maybe start thinking about selling some value stocks and buying some growth names. Not Zoom, but picking. There's 100 companies, a couple hundred that are significantly off the highs now. And, that could stabilize and could start to, the money might start rotating back into growth again. So if you're too heavy on one side, it's time to reallocate. But if you're coming in and like buying value stocks now and selling your growth stocks now, you're doing it backwards.
Kind of late.
I mean, 3 months ago was a time to do that, even 2 months ago, even a month ago. But they've run so far. I mean, do I want to go and sell, some of these growth names for Viacom? I mean, do I want to go sell some of these growth names for whatever, even the retail value trade, it started to come off in some of these the last couple of days, like Kohl's, and Macy's. You've seen some of the retailers come off. Chevron has had a bad few days. Oil's had a bad couple of, weeks, a week here. So you're starting to see some of the rotation come off again, but you got to be aware of it. You've got to be aware of what the rotation is. And right now they're rotating actually out of some of these other value names. They're rotating into value tech. So the value trade rotated over, and growth is still getting forgotten. Does it start getting hot again? I think it does eventually. So, like I said, if you want to start looking at some of these names that have really been beat up, maybe you start nibbling at some of the growth stocks again.
JT is asking about MWK. You always got to be careful with these two because there's two Mohawks, right? There's MWK. Yeah, MWK is Mohawk Group, and MHK is Mohawk Industries. That's the flooring company.
Yeah, the carpet.
But MWK, the one JT talked about, that's like the technology company. It's like a SaaS platform, I guess, for consumer goods. I'm not totally clear. JT's asking about MWK. That's the technology company, not the flooring one.
The 40 is the 50% retracement, so you're probably going to struggle there. So it's hard coming in and buying it now. I mean, if you're looking at that growth trade, there's other names that haven't really even got off the mat that maybe, you want to play a laggard trade on it. But, like I've said on the show yesterday, a stock like Roblox, which Kramer featured last night, and he said he would buy it right now. I mean, it's crazy, he's jumping in, and that's what he said last night. He's like, I would buy it right now, RBLX. I kind of agree with Kramer on just the fact that this is a company that's, a newer, sexier name. And if we do switch back to growth, this is a company that could go. I said on the show a few days ago that I think if growth starts to get hot again, this is going to be one that leads the way. So could Mohawk, I went the segue because MWK is a newer one too. Could MWK be one that leads the way as well? If we potentially, come back, it could. So I think you look at, maybe you're starting to look at what the new leaders could be if we start to move back into a growth and favor market. Because I don't think growth's going to stay out of favor for as long as everybody thinks it is. Analyst gets on CNBC and says, this is values time, and growth, we're going to go into a 7-year growth bear market. I don't know if that's the case. I don't like paying 70 times sales for stuff, but as trades, you got to just be, always flipping around, going back and forth. So if I'm going to start getting back into growth, I want to be in names like this Roblox and maybe even this MWK, which I don't know much about.
Boy, it had a really good day on Friday, 32.85 to 35.45, and you moved up again yesterday. I just don't like that it sold $1.80 off that high for the day. 37.01 was the close. So I guess you could sit tight and say, hey, this holds 36. It's still looking pretty good. That's the uptrend. The only thing is that you got that one close at 5.45, but your next daily lows are down at 31.02, 31.50. So better hold this 36, and let's see if the 38.80 comes into play today. Sold off $1.80 from that level, so might have some people. I think you make a lower high today. I don't know about a lower low, but that's what I'm looking at. 38.80. Boy, this thing moves around for a $30 stock. Yeah. S&P's on the comeback trail here. 39.20.75 had that little dip overnight. Let's keep an eye on upside if you're looking for a short-term target. The close was 39.30. On the downside, we're off that pre-market low by quite a bit. You got a lot of Fed speak going on, so I think you can see a lot of head fakes today.
Guys, smash that like button. Spinner in the Benzinga.com chat noting a headline that I had actually missed this morning. That was out during our show that HIG, the Hartford board, has rejected a takeover offer from Chubb. So if you look at HIG, you'll see that run up a couple days ago. That was when Chubb came out with the takeover offer. HIG is rejecting the offer. It was at 60. What was the damn offering price there? Well, I don't know if there was a price on it. It was $21 billion takeover. Anyway, they've rejected it, so that's the reason for the red candle this morning. We'll see if
not too red though. Not too red. Maybe someone's kicking around, or maybe someone's going to
come back with a better bid.
Exactly.
I mean, Chubb's not rallying either on this, so at least not yet. I mean, if Chubb's out, you'll see Chubb rally. So just be careful short Chubb here now. If Chubb says, okay, we're out, you can see Chubb because it sold off like $20 here.
A lot.
Yeah, significantly. I mean, some of that, is the insurance financial trade has come off a little bit, but that's all pretty much HIG. So I mean, I actually don't mind Chubb down here. Pretty good company. decent valuation, maybe you start thinking about nibbling on a stock like Chubb, because if they turn around and say they're out, that could pop $5-6 just on the headline. If they have to raise their price, then and they're still going on it, then it's going to continue to fall. So it all a little bit obviously.
Yeah, I mean, they obviously didn't like them paying what they were paying. So now if they pay more,
yeah, they're going to hit it farther. But maybe they're just going to say, okay, you want more, we're out.
yeah.
And so I mean, the trade would be to short HIG then too, if that's the case. But Chubb, I don't mind it down here.
All right, everyone, guys, smash that like button, please, in YouTube. And also be more like Kelly. Kelly Barrett says she tells everyone she knows about this show. Be like Kelly. Tell everyone you know about this show. I don't care if you only know your cat and your dog. Tell them, okay? Tell your pet.
What's this? I'm sorry.
No. What you're going to say.
Everybody's talking about RLX. What is this? I've never even seen the stock. It just came out like 10 days ago. It's like, this got to be this. Was this a spinoff? Was this a new IPO? What's the deal with this?
So this was the Chinese e-cig thing, right? That's what that was.
No,
This is. Yeah, so I wanted to bring this up the other day. We kind of ran out of time to bring it up, but yeah, there was a report, I think from Reuters, I want to say, that China is basically, they don't really have any vaping or e-cig regulations, and the report was they're going to move to be more in line with what the U.S. has, and this is similar to the vaping thing that we dealt with from a couple years ago. So, that's what our
direct hit.
Yeah, direct hit. I mean, they're a vaping business. That's what RLX does. So
yeah, that doesn't sound great.
It doesn't
sound not great, Bob. Not great, Bob. All right, it is 9:03. Let me bring on our next guest, guys. We're a year from the bottom of this crisis, and what that means is there's going to be a lot of companies that made a lot of adjustments to their earnings in the last year. And our next guest actually spends his time going through the details of these earnings reports and seeing, that looks weird. That's a weird adjustment. Oh, they buried that detail. That seems notable. David Traynor is the founder and CEO of New Construct, joining us now on Pre-Market Prep. David, good morning.
Good morning. Good to be with you.
Good to be with you as well. So we are basically through the end of the I guess Q4 earnings season, you'd call it. And what, at a high level, what did you see? Did you see a lot of adjustments, a lot of companies, since they're reporting for not just the quarter, but for the whole year, right? Did you see a lot of like weird stuff in this earnings season?
We did. Even in I think the fourth quarter last year, so just through 3 quarters. Actually, I take that back. Through 2 quarters of 2020, we did an analysis. The Wall Street Journal picked this up actually, that showed that there were more write-downs reported in the first half of 2020 than in any prior full year for like the last, I think since the financial crisis. So it's the big time kitchen sink effect is what we've been seeing, where companies are purposely taking all the charges they can take to clean their books, to look as good as they can look, so that when things turn around, earnings can be as good as possible and stock prices can go up as much as possible. And I think we've already been seeing some of that over the last few months.
Do you think some of that was like genuine, like genuine write-downs, or people or companies also just being like, all right, this is our chance, let's just throw all the crap out while we can?
That's the funny thing about all this stuff, Spencer. There's always a little bit of genuinity in there, but a lot of it isn't. A lot of it's overstatement, and it's always sort of dividing between those two things that's most important.
Interesting. So, like when you say you saw a lot of examples, can you give a couple of names and what you saw?
Well, I can. In terms of companies that had the biggest write-downs, like overstatements, a great example just came out the other day. Ingersoll Rand had a bunch of unusual charges. Most of these were hidden, right? So they were in other operating expenses, net. So they were reported as operating, even though they were non-recurring. 146 million of these in total. The distortions we found distorted by almost 500%. But for example, there was inside this other operating expense, I'm reading from our report, there was 93 million in restructuring charges that you found on page 108, 40 sources and news and all that. And really what's been discovered in the last few months or published really is that earnings and research is not as reliable as people think. The numbers just aren't as reliable as people think. And I think in order to be successful, especially in this meme stock frenzy world, you need to have some reliable fundamental dashboard, right? Just understand, hey, is GameStop still a good deal at $50 or at $400, right? Somewhere in there, it goes off the rails.
I don't know.
And what we're here to do is provide people something that's reliable. And we've got a unique technology to do that. Think of us as like blockchain for investing research. We can go through a 500-page document, pull out all these details and footnotes, and give people something that's unconflicted and reliable to understand profits.
So you mentioned it. Are you going to be going through the report tonight with a fine-tooth comb, trying to find some whatever kind of weird stuff may or may not be there in GameStop?
Yeah, absolutely. That's what we've been doing. And funny thing is, we actually were early on GameStop. When we were talking this time last year, Spencer, it was on our focus list. And we liked that stock for a while. We came around this year and we said, wow, this thing's it's coming around pretty well. It started getting to $30 and we said, okay, well, it's time for us to close. And by the time we went through our processes, the stock was at 300.
So are there specific things, specific red flags, specific terminologies that you're going to be scraping for, looking for tonight that other people can also look for?
Yeah, there are a ton of keywords, things like unusual, things like non-recurring, things like acquisition related. If you go to our Ingersoll Rand report, there's a nice list of them. Foreign currency transaction losses, severance, acquisition related expenses, restructuring. Our database and our technology, has probably, I don't know, 1 million of these things that we've been collecting over the years. And that's how we taught it. We had humans go through and say, hey, this is wrong and it belongs not in this category, but this category.
Right.
We've done that millions and millions of times with the aid of technology, so that now the machine can go through that, sweep through that filing in a matter of seconds or a couple of minutes. A human can go through and say, okay, this all looks right. We've got a bunch of algorithms that check for all these kind of differences. And we can distill a couple 100 pages, 500-page complex annual or quarterly report, very quickly in order to give people, that unconflicted, unbiased measure of profits.
Yep. Ron with David Traynor is the founder and CEO of New Constructs. Newconstructs.com is his website. So overall, David, we're through the end of this earnings season. And you mentioned the Ingersoll Rand report from a couple of days ago. That was pretty recent. But by and large, at least as it pertains to the most recent reports, more or less than expected. And do you expect going forward, now that we've kind of been at this thing for a year, or a year into this crisis, do you expect the number of write-downs or adjustments or things to revert back to the mean pre-COVID?
Yeah, so I think that's right. What we've seen when companies have written down so much, right, an extraordinary amount in a short amount of time.
Yeah,
it's like everything's exaggerated, Spencer. I mean,
right.
I think the tech bubble, and we've seen kitchen sink earnings before, but nothing like what we've seen recently, and nothing like what we've seen in terms of sort of ridiculous expectations baked into stock prices. And so what we'll probably switch from is companies that are understating their earnings by burying so many unusual losses in there, to companies that are going to start juicing the earnings by sneaking unusual gains into their numbers and overstating profits so as to take advantage of the euphoric investment environment.
So, like, what terms could we look for if I was going through an earnings, like a earnings report or a quarterly filing?
The word gain is a big one.
Gain, okay.
Yeah, gain, unusual income, reversal, charges to other accounts. These are all that's a financial one.
Yeah,
these are all things that you do Control F on a Q or a K or a press release. Press releases oftentimes aren't going to have those kinds of details. But yeah, those are some keywords to look for in terms of unusual gains, unusual income.
Interesting. Okay. Question from the chat here. Let me find it. Crazy Clan is asking, David, have you done this sort of research on any EV companies Tesla, Neo, etc., or any battery plays. We know there's a lot of divisiveness around Tesla and their stock versus their balance sheet. And really, Tesla is just the poster child for the entire space. Have you done this sort of research on the EV space?
We have actually. We did some. It was actually an article covered in Bloomberg where we looked at write-downs across sort of the EV companies versus the traditional. The thesis being that the traditional companies, traditional internal combustible engine companies, had to experience more write-downs because maybe their technology was bad, and it didn't turn out that way at all. And they were sort of on a per asset basis, write-downs were equal for the EVs versus the incumbents. But I think with respect to Tesla, they have an unusual income item that is critical to their ability to be profitable. And those are the sale of regulatory credits that we deem as non-recurring and quickly diminishing as we've seen now the incumbents quickly decide to bring a lot of EV production online or to switch their factories over. So Tesla's going to have to find a way to make real profits, which we expect to be considerably challenging with all the with all the competition that's coming in.
So are there other companies maybe like Tesla that are on your like high alert list that whenever every quarter the report comes around, you're like, okay, we need to look at this? Maybe like GameStop for right now, maybe Tesla. Are there other ones that are like super like, okay, like we're super focused on this one. This one is of high interest to us.
Yeah, a couple on the short side, right, that we're just waiting to blow up. DoorDash and Carvana.
Interesting.
Right, like DoorDash is really still not making any money. In what is a best ever environment, it's a zero margin business, right? I mean, how many $1 million pizza delivery drivers have you ever known in your life, right?
Not many. Not many.
Risky business doesn't count, right? And so, that's a business that's just there's a lot of competition. It's a zero margin business, and the valuation there is pretty ridiculous. Another one is Carvana.
This is interesting because I've never understood this business model has always escaped me. As I understand it, they just like you buy a car and then they deliver it to you, right? Isn't that how it works? And the model, it's also like used cars, right? I don't know. The model has never quite made sense to me. I don't know. Yeah, no. When you dig deeper, basically the value proposition is that you can buy a car with a more online experience. Well, guess what? Everyone does that now, right? It's not that hard. Like being able to do things online is not a significant competitive advantage. The real issue with Carvana is that they've got lower profits and margins because they have a whole lot less scale, but they're priced as if they're going to sell 4 times as many cars as the industry leader or CarMax. And CarMax benefits from having both the online and bricks and mortar approach. And guess what? People like to test drive cars before they buy them. Yeah, right? That's a big purchase. I'm not just going to like look at it online and do that. And so, Carvana has got an interesting switch they're trying to undertake in their business model, where they're trying to buy more cars too. Because one of the problems in trying to sell as many cars as they wanted to sell is that they lack the benefit of a brick and mortar dealership because they didn't get all these trade-ins, right? They didn't take trade-ins. You can only buy. But the trade-ins are critical to selling and having inventory for used cars, because that's where actually the dealers make most of their money is on the trade-ins as opposed to the auction. Right. And so, you're looking at a stock that missed expectations in the last quarter, and is it's still trading sky high. It's I think part of this, I don't know, techie happy investing bubble that we're in some cases. Hey, give them credit. They've got cool towers. There's one near me. And on that note about the online thing, I mean, I don't know if you've ever tried to buy a Tesla, but it takes like 2 minutes. You know what I mean? It's like the easiest thing in the world. You go to the website, you click, I want that color, I want that model, I want this extension. Boom, you're done. 5 minutes, you're done. Just bought a Tesla. Right, it's like the easiest thing to do in the world. I mean that's the way it should be, right? And so, right. And I bought a car on Carvana, and
been happy with one, not so much on the other. Just trying to check it out, and it wasn't that seamless, and yet when I went to get it, I still had to do a lot of paperwork.
Oh, I can't. Maybe they haven't been able to hack that away yet. David Traynor is the founder and CEO of New Constructs. Does some very good, deep research on earnings reports, 10Ks, 10Qs, and like the accounting behind that stuff. So highly recommend that. David, always a pleasure. Thank you so much. We'll have you on again later in the year.
Great. Thank you, Spencer.
Right.
Good to be with you.
All righty. It is 9:17. That's going to be a wrap for pre-market prep today. If you're listening to this show via podcast, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guests, both Nick Chahine and David Traynor. I know we did some ticker time today. I've been trying to get to more of that. I'm really trying hard to cover as many tickers as we can, but if for whatever reason you asked a question, you dropped a ticker in chat and we didn't get to it, that's okay, because the chat runs our next show, Get Technical with Neil Hamilton, which is about to start. His show is basically like 20% things that Neil cares about, 80% things that chat cares about. So if you have a question, stick around. There is almost assuredly basically Neil will get to your question if you stick around. It's basically what the point of Get Technical is a show for you and your questions and your charts. And Neil will look at anything and everything as long as it has price action and price history. Neil will look at it. All right, smash that like button, please, guys, for the show. Seriously, that it sounds like stupid. I feel dumb saying it all the time, but it does help. It really does help on YouTube. So hit that like button, not just on YouTube, wherever you're watching this. If you're watching this on Facebook, we're on Twitch, we're on Twitter or Periscope. Smash the like button, please, please, please. And thank you for that. You can always email us as well. If you have any questions, comments, concerns, feedback, good or bad, you love us, you hate us, email us premarket@benzinga.com.